Hi, we're back here with Heather. Heather, we have a lot, there's so much more to cover that we can't do it any justice, obviously. You've mentioned a couple times so far in this that reporting. So what type of reporting needs to be done? Who's responsible for it? And I'd really like you to dig into the 1099-R.
Okay.
I think all of us have sometimes some issues in really understanding how to read the 1099-R.
Okay. So we've been talking, I think the resounding theme, and I'll say it again, trustee to trustee transfers are your friend. Why is that? Because there is no reporting required. So that is the takeaway. But in the land of distributions and subsequent rollovers, which is what we've been talking about, there are two mechanisms for that. There is the 1099-R, which reports distributions from qualified plans, IRAs, non-qualified annuities, but in this case we're talking about the qualified world. The 1099-R is what reports that distribution. Here's where it gets people in trouble. They get this 1099-R, and incidentally, anyone that takes a distribution from a plan or IRA in 2023 will get this 1099-R in their mailbox no later than the end of January. Okay, it will report the distribution. Now, what happens when they roll it over within the 60 days we've been talking about? They'll say, wait a minute, I've got this 1099-R in hand, but I don't have anything that shows the IRS that I rolled it. And they panic. Because the other side of that is what's called the IRS Form 5498. That is what reports the rollover into the IRA. That doesn't get sent to the consumer or the IRA person until the end of May. That's
a problem.
That's a problem. It's really not, because the IRS gets a copy as well, and they're not expecting the 5498. The 5498 is just for the taxpayer's records. But it always causes alarm, and I get calls every year at tax time where they say, wait a minute, my client rolled over their IRA. They took an indirect distribution from their IRA. They rolled it within 60 days. We shouldn't have a problem here. They're panicking because they have nothing. I've even had tax people say, well, where's the 5498? So they should know. But the point is, you avoid that if you do trustee to trustee transfer. So where's the reporting? So that's the reporting, right? The employee or the employer or the IRA custodian reports the distribution on a 1099-R. If it is in fact all or a portion of it's rolled within 60 days, that gets reported on the 5498.
Okay.
It doesn't go with the tax. Obviously, it doesn't go with the tax return because it's not there in time. The 1099-R does. It is responsibility, though. This is the important thing. When you do a rollover like that, it is the responsibility of the taxpayer to report it correctly. So on the tax return, it will say total IRA distributions or qualified plan distributions. Let's say it was $100,000. They're going to put $100,000. They're going to put whatever's on the 1099-R. If they've rolled all of it within the 60 days, they haven't violated the one rollover per 12 month that we talked about in a previous segment. If they rolled it all over, then the total taxable amount will say zero. The 5498 will come, showing that they did that. They retain that for their records. But it is ultimately the responsibility of the taxpayer to make sure that they have adequately informed their tax preparer, because the tax preparer isn't going to know, right, unless they tell them, hey, I rolled it. Right? So that's the thing. Now with the 1099-R, there is a whole host of information on the 1099-R. Obviously, it's going to show a total, the total taxable amount. Sometimes you'll get a return of non-taxable if there's an after-tax basis in it, or if there's Roth money or something like that. That will be reported. The critical thing is what's in box 7. That's what I always ask people, because that tells me what type of distribution are we dealing with, right? So if, for example, the person is under 59 and a half, well, that distribution code in box 7 will be a 1, and that's a premature distribution. That means they took a distribution with there's no known exception, and they say, well, wait a minute, but I rolled it within, like, say I took it from a 401k, it was a direct rollover.
Right.
It's still going to be reported on the 1099-R, but guess what? There is, if it was directly rolled, the box 7 will show that it was directly rolled to another plan or IRA.
Okay.
So box 7 is really the critical component for kind of piecing the pieces together, which, being the nerd that I am, I love to piece things together when we're trying to figure out what kind of distribution are we dealing with. If it's a death distribution, if it's an inherited account, there will be a code for that. If it is a premature exception, let's say they took a distribution and it was a disability, it will say, it will have a 2 for premature exception. So there's a lot of information that's useful on that. What I would say is, get familiar with the 1099-R as you're helping your clients. Make sure that you're familiar with it, because they are going to come to you expecting you to have the answer. So it's not that difficult to really read the instructions for it. It's not that long. So be familiar with the deadlines. Again, January 31st of the following year after the taxable year the distribution occurred. 5498 will report rollovers, but doesn't come until after taxes are filed. Just tell them not to fear. Just report it correctly on their tax return if they did a rollover.
That's great advice. And none of us, I'll put all of us out there in the advisor, none of us have studied the 1099-Rs enough to really understand them and be able to give good counsel to our clients. My humble opinion. Okay, I'll just take it on for myself. Well, thank you so much for being here. Here's my big takeaway today. Trustee to trustee.
Do a trustee to trustee transfer. Anytime you're dealing with IRAs, please don't take the short route. It ultimately ends up causing stress with the client that doesn't need to be there.
Yeah.
Do it as a trustee to trustee transfer. Have the new custodian that you're trying to move the IRA to ask for the funds from the current carrier, so that you avoid all of that entirely. There is no reporting of that. It's an unlimited. You can do it. I don't know. You can do it every day if you wanted to, and the client doesn't have to worry about making sure that they report an indirect rollover or a rollover on their tax return.